Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. Let's bring in Landon Swan. He's a co-founder at Likefolio. Landon, welcome back to the show.
Thanks. Good to be here.
All right. So we're talking Doordash. Thought it was fitting. The stock got upgraded today. As I mentioned before, stock is up over 70% so far in 2023. It just seems like as more people go to restaurants, Landon, it just seems like Doordash, the demand would wane, but the stock price kind of reflects that demand's still out there and they're still growing. Does your data back that up?
You know what? Our data largely supports the stock move over the last year. They are the clear leader by far. And, Uber Eats is, I think, second place, according to our data, and somewhat taking a bite out of Doordash. But what we see with Doordash is that they're really planning for the future. They're building a long-term strategy, and it's working right now. So you can go back to the COVID shutdowns, and they cut commissions by 50%, which of course helped the local restaurants, but it also gained a lot of loyalty. And now they're at a position where they're getting plus 30% on revenue yearly, and that's just a consistent mark that they're hitting. It's a very high margin company, so any dollars that they get coming in are largely going to the bottom line. They're investing in their services, so they're adding grocery, they're adding convenience, they're going international. They just bought a company over in Europe called Wolt, I think, W-O-L-T. And so they're investing in their systems. They're adding ways so that people are more likely to do dual orders where they're getting grocery and food or food and convenience stores. And about 15% of customers are doing that right now. And they're increasing their efficiency with matching orders with drivers, which reduces their driver acquisition costs. So they're doing a lot of things that are very rooted in a long-term strategy, which obviously as an investor you like. So then you got to look at where are they at now. As you mentioned, with restaurants opening more, you would think that people would be going out more and getting delivered less. And our data does show a little bit of a slowdown, especially when you look at the website data. It's down about 3% on a year-over-year basis, but it's not alarming. It's not an alarming move. The mentions data is down from plus 18% to about plus 7% when you zoom in on a narrow moving average. So the data that we're showing is that they're strong, but maybe slowing down just a little bit. But again, very clearly the leader and building a long-term business. And the other thing that, everyone knows this is not it's super insightful, but once they get to the point where they don't need drivers, all of these investments that they've made and all of the loyalty that they've built is going to just be a huge, huge boom for this company. So I think they're just getting in play. They're setting themselves up for that day where you don't have to pay drivers and everybody's getting food, grocery, convenience store deliveries through them. And then, sky's the limit for the stock. So this is a long-term play. This is not a short-term play. I like the company long-term. I think that to be a good investment, maybe a little bit of a dip. It's been on a great run, so I'm not sure if I'm an investor here. They need time to mature and have all these investments pay off internally, but their positioning right now is very strong.
Landon, the grocery delivery business, Wolt, is what they bought, and that focuses on the last mile of delivery, which, listen, I think that this was an amazing company during the pandemic. I think arguably the stock has come down, but Landon, in the peak of the pandemic, they didn't make money. They're not making money now. They want to invest in 5 more new businesses that probably aren't going to make money for a while. How does this company keep going? They're, if their CEO comes on and says, we have to invest in other companies because the one we're in now may not make it long term with competition. And Landon, if they're getting rid of drivers, right? I think that is a real scenario going forward where you could get rid of drivers. But doesn't Doordash just have to buy cars then? Isn't their expense just going from paying the driver with the car to buying the car? That seems like another big expense. And my only problem with this company is they don't make money. They've never made money, and I don't know where they're going to make money, Landon.
Yeah, I agree with you. I think the driverless is the path. I think their competition on driverless is going to be a company like Tesla. I would not be surprised if they got into this space. And I don't know that they need to own cars. I think they may just need to tap in to owners of self-driving cars and say, hey, when you're not using it, let us use it. So they may not need to use to own the cars themselves. But I think the question is, do you invest in this space? Is this space viable in the future? If so, DoorDash is by far the clear leader. I mean, we look at people talking about the companies. It is 80% of the share, right? I mean, they are 80% of the mentioned volume. There, you can see on the chart here that they're growing a little bit. Uber Eats is the only one that's beginning to eat into them, which is a real, it's a real threat. I think that's the concern: is will competition come in? And maybe a bigger concern is the loyalty that they're building now and the services that they're building now, all the efficiencies, is it going to have a clear moat around it when driverless does come, or is that just going to open the floodgates of competition, including Tesla and other companies? So that's the play. Like, if you believe in this space at all, I think DoorDash is a good investment long term. Again, I'd buy on dips here. I think it's a little high, but everything that they're doing suggests to me that they are investing in this company to be a long-term success. They're not trying to crank out cash right now. They're spending their money, getting people to order more dual orders, investing in other companies, all of that, all the efficiencies that they're building. So obviously they believe it's a long-term success, and you have to if it's your company. But that's up to the investor. If you think that food delivery is a long-term successful game, I think DoorDash is probably the smartest investment. Second smartest investment might be Tesla, because Tesla is a better investment than DoorDash in general. But if you're just talking about food delivery, I really do think Tesla's the competition maybe 5 or 10 years from now. So I'll leave it up to the viewers if it's a good investment in this space. But this company is a strong investment based on their long-term investment.
Yeah, the charges. I think that's going to be, eventually come to, fruition, where people just get sick of it because the expense is so big when you're ordering something through these companies, Landon. But then, does that equate to anything on happiness? It seems like people are still comfortable, spending 20 to 30% more to get something delivered when they put a little effort into it. They could probably get it a lot cheaper. Are you guys seeing any decrease in happiness levels at this point?
You know what? Happiness is fairly steady, but not high. I mean, we're talking around 40% for most of these companies. I mean, this is like airlines type stuff. You pretty much only talk about it on social media if you're complaining about it. You expect to get exactly what you ordered on time. So if you get that, you're not commenting for the most part. And if you are commenting, it's because it didn't happen. So we're not seeing a big movement in happiness. DoorDash is the leader. I think they're at 42%. Uber Eats is 39%. So it's pretty low when it comes to happiness. But I do think that, I hate to keep hitting the driverless thing, but once we get there, those fees do come down and it makes a lot more sense. I don't know how many years away we are from that. I mean, technology doubles in pace every 2 years or something like that. I mean, it's incredible what technology can do. But driverless cars is a pretty, you got to get that exactly right. There's no room for error when it comes to, people's lives on the road. So you got to get that exactly right. So I don't know, are we 5 years out? Are we 10 years out?
Yeah.
I'm not sure. When we get there, though, this is a completely different company.
Yeah, I think Kevin and I have stated that before. It's like they keep on talking. Uber was the same way. They keep on talking about driverless cars, but it's going to be a lot longer than you think. It already has been at this point. And the scrutiny, Landon, even though people that drive probably cause more accidents, the scrutiny on driverless cars is going to be massive, even though
Absolutely.
The data will be less than cars with drivers in it. But we'll have to wait and see on that. All right, great stuff, great data. As always, Landon, appreciate it.